Well, let's focus on the big interview then. We have Ola Electric. They reported their Q2 earnings, the company's numbers, missed street estimates. However, the operational numbers have shown an improvement. To discuss the quarter gone by, what's the way ahead? We're joined by Bhavish Aggarwal, the chairman and MD of Ola Electric Mobility. Hi, Bhavish. Always good speaking to you. Thanks a lot for joining in here on CNBC TV 18. Well, the last time we chatted, you said that there is a path to profitability. You're going to be breaking even. Could you tell us in which quarter do we see this break-even point? And also your gross margins, they have improved to around 20% odd. And you have stated that it will gradually improve from year on as you get backward integrated. What's the number we should be working with on the gross margin front as well?
Nigel, always good to be with you. Thank you for having me early morning. On our quarterly results, it's been a quarter where the key message I want to share is the fundamentals of the industry and of our company are stronger. Fundamentals mean, firstly, penetration. The EV penetration is actually inflecting. In scooters, EV penetration is already above 20 odd percent, and in some states actually closer to 50%. So that means EVs are now being adopted by consumers en masse. It's at that inflection stage already. Our focus has been to continue market leadership and investing in growth while continuing on our path to profitability. And like you mentioned, a couple of highlights over there I want to share. Firstly, our gross margins continue to improve quarter on quarter. In Q2 over Q1, our gross margins had a 3-point improvement due to BOM cost reduction, but then we invested part of that back into growth. And over the next couple of quarters also, people will see a kind of a good journey of improvement on gross margins because our theme on manufacturing vertical integration, as well as the Gen 3 platform, all of it is coming together between this quarter and next quarter. And I want to actually highlight that our Gen 3 platform, which was scheduled for August next year, is actually coming out in January, in just 2 months. So we've actually been executing ahead of curve, ahead of schedule on that. And the Gen 3 platform over the next 12 months will actually bring about almost 20 points of BOM cost or margin enhancement on our gross margins. So that's a major initiative from our side. In terms of time to profitability or path to profitability, I think people will be positively surprised over the next couple of quarters on how our business, with improving gross margins, with improving scale of sales as well as new products, how the profitability actually comes into a very, very good shape over the next couple of quarters.
Well, the street will be looking forward to a timeline out there. And as you were about to address that point, when the stock moved to the high point of the day, we thought we're going to get the timeline. When do you think? First half of FY26 or the second half of FY26? And since you're saying that market share is another factor that you look at, you'll have still holding on to that 30% odd mark. Where do you see this number headed? And Bhavish, give us a number. What's the targeted market share that you're looking at?
See, as a leader, Nigel, our target market share is about between 30-35%, right? So that's where we believe, despite competitive intensity, we'll be able to target. And our focus is not just market share within the e-scooter segment. Our focus is to now actually broaden the EV journey of India from scooters into motorbikes, into three-wheelers also. And in our quarterly call, we had shared an update on the timelines of our three-wheeler. While we in scooters expect to retain a market share of about 30-35%, we actually look forward to increasing the journey of electrification in these other categories. So all inclusive, our EV market share could be actually slightly higher than the 30-35% number, depending on how these new categories scale up. But market share is one, and then linked to volumes is operating leverage on the bottom line. And that delivers, I would like to say, good surprises in the near term on profitability.
So EBITDA margin positive in FY26. That's a given, right?
See, auto segment EBITDA margin was very close to positive even last quarter. So our auto segment EBITDA margins, one can assume in that timeline will be in the positive territory.
Okay. And even your gross margin goal, X of the incentives, is 30%. When will you achieve that, Bhavish?
See, our gross margin journey, if I can just lay it out for your viewers, right now our gross margin is about 21% with incentives. All the incentives are not booked into it. PLI, I think we're booking only about 5-6% into that. So with Gen 3 platform, over the next 12 months, we'll get about a 20-point advantage on our gross margins. And you can see that's a very meaningful change because of our vertical integration and our technology. So that will play out over the next 12 months. And then our own cell, the 4680 Bharat cell, will be coming on in Q1 of FY26. So that will add another 7 to 8 points of margin. And then over time, over the next few years, as incentives go away, about 10-15% of incentives will go away. So that leaves about a 30-35% steady state gross margin. So that's our target. And we are moving every quarter on quarter, we are moving in that direction.
So say by FY30, is there a rough timeline?
FY30 might be a little too far.
So what are we looking at? When do you get to 30%?
The Gen 3 timeline is 12 months. The savings start next quarter onwards, and then they kind of add up over the next 12 months. So all that 20 points will actually be over the next 12 months. And our cell is also in the next 12 months, like I said. So all this roadmap is actually a couple of years of roadmap. This is not a long-term 5-year roadmap.
Okay. Bhavish, if we talk about deliveries, while the mass segment has seen a growth of 15% sequentially, but your premium segment, it contributes major chunk of the revenue, has seen a fall both on a sequential and on a YY basis. Is it because of a change in the strategy or the growth mass segment because of heavy discounting that you've been offering? What explains that, and what is the outlook here?
See, one point I want to say is because of our platformized approach, we have a very similar gross margin on premium and mass products. It's not like the mass products have a very low gross margin and the premium has a very high gross margin. That's why despite the mix change over the last quarter and this quarter, you can see the margins are actually broadly held stable. So you can expect that going forward also, that our margins are similar across premium and mass. And our strategy actually remains to grow in both segments. With our Gen 3, you will see us launch a refreshed premium set of products, as well as a refreshed and an extended mass portfolio. So we expect both our segments to grow. And broadly, in the end, our volumes will reflect the industry, because we are playing across industry segments. We're not just a premium player. We're not just a mass player. We are playing across 2 and 3 wheelers across all segments of the market. So broadly, volumes will reflect what the industry structure is.
So is there a number, Bhavish, to both the segments? Since you're focusing on both, how much will they grow by? Will they grow equally, or will one segment do better than the other?
See, for the foreseeable future, I expect about 1/3 of our volumes to come from premium and about 2/3 from the mass. That would mean revenue of about 50-50. Right?
All right.
Yeah.
Got it. Bhavish, you have mentioned in the past you're looking to address the servicing issues. And that's going to be the big point that the street will be looking forward to as well. So shareholders, they look at the stock price performance, and your customers will be hoping for better service. Tell us, what are you doing about this? And I want to highlight 2 parameters. One is how many service centers you have, and where do you see the number headed to? Point number 1. Point number 2, how many mechanics you had in the first half of the year, and how much higher will it be in the second half of the year? Please go ahead.
Nigel, very relevant and topical point. I want to start by saying service, the whole noise around service that we had seen a month or so ago is behind us now. We had a temporary increase in service outstanding backlogs because we had not expanded capacity fast enough in the last 6 to 8 months. Now we have addressed that. So any service backlogs are all history now. We are now doing more than 80% service requests within T+1 days. That means if you bring your scooter today, we will service it today or tomorrow. 80% of such issues are resolved in T+1 days. In terms of capacity, we've also in the last 2 months expanded capacity significantly, both in terms of number of centers. We were around 500 maybe a quarter ago, and now we are above 600. And also in terms of the number of mechanics, we are, each of these 600 stores is staffed with multiple mechanics now. So in the last quarter or so, we have expanded capacity by about 20%. Our focus in the next 2 quarters, let's say by March of 2025, is to get to about 2,000 stores and about 1,500 or so service centers also. And this is, we are executing on this roadmap. We should be able to achieve this by March.
Okay.
Yeah.
What is the current service backlog, Bhavish, and what was the average resolution time earlier, and what is it now?
The service backlog is all history now. In the middle it had spiked, like I said, because we had not expanded our sales volumes in the last 12 months had expanded a lot, and our service volumes had not expanded. Service capacity had not grown in sync, and now we have fixed that operational issue. So there is no backlog. Generally speaking, there would be a few anecdotes here and there, but no backlog of any service issues. More than 80% are serviced within a day. Right? This number, let's say a month or two back, was maybe 15 points lower. So we have significantly improved, and there is still some headroom for improvement, which we are working on for this quarter and the next.
All right. Bhavish, you fielded most of our questions. You've given us a fair idea about things going ahead. But I need to ask you about the share price. And being a promoter who's built this company over the years, you will know the actual value of the company. Your peer, Mr. Rajiv Bajaj, doesn't stop short at saying that he believes Bajaj Auto should be 20,000 rupees per share. What about you? Your stock price is at 75 rupees. What do you think is the actual value of the stock price? Go for it.
Nigel, we are building the future at Ola Electric, right? We are the EV leader. The future is going to be EV, especially in the 2 and 3 wheeler. And we have the strength in technology. We have the strength in manufacturing, especially for EVs. And we have the strength in distribution. So I think shareholders are seeing strong value in our story. Share price will move up or down here and there. I'm not bothered about daily movements of share price. But our focus is to really build the future of the automotive segment, automotive industry with Ola Electric. And we are allocating capital wisely. We are on the path to profitability. So I do expect shareholders and prospective shareholders to join this journey and really build the future with us.
Very quickly, Bhavish, on your interest cost in the past quarter, it was around 85 crores, but now you've got the money from the IPO as well. Could you tell us, that interest cost comes down, right? Because you'll repay bulk of the debt. Yeah. What's the quarterly run rate?
Yeah, the debt will get repaid most likely in the next quarter or later this quarter. So that that'll bring down debt by roughly, I think, 25-30% overall. But some of the project finance will remain. The project finance, which is for the Gigafactory, etc., that's more long-term debt. That's not what we will repay. We'll repay most of the working capital. Because the working capital cycles have also now stabilized with the government receivables or the FAME or the supplier payouts. The working capital is stabilizing. So now we believe we will not need long lines to run that.
Okay, Bhavish, thanks a lot for joining in here on CNBC TV 18. You've got your eye on turning profitable. You're looking at backward integration, holding on to your market share. And as you said, the service requests are now being addressed. Thanks a lot for speaking to us here on CNBC TV 18.
Thank you, Nigel.
In fact, the stock is now up close to about 2.5%. In the morning, it was in the red. It was down about 2% odd. But now, as Mr. Aggarwal was speaking, the stock is now inched up. By the way,